Welcome to the Olson Group Benefits TV. I'm your host, Tim Olson. This is the show that is dedicated to informing, educating, and empowering employees to make the best benefit decisions for themselves and their family. Today's episode is your employer's retirement plan. What's in it for you? Now, before I answer that question, we're going to talk about some of the tough issues that employees face. 25% of people believe they'll have to work until age 80 before they can afford to retire. When we retire, it's estimated that we need 70% of our replacement income in order to afford to retire. We have inflation that affects our retirement income. And over the past 20 years, for example, a movie cost $4.15 in 1994. Today, it's over $9, even $10 or more. Gas, $1.09 versus $3.29. Motel 6, 1995 in 1994. Today, $44.95. So the impact inflation has when we retire and we're on a fixed income is it erodes the value of our assets and it chips away at our retirement income. Another problem that we face is that many Americans are dependent upon Social Security. The fact is, Social Security will only pay 40% replacement income when we retire. And does that really meet our financial goals during our retirement years? So the question is, why should you save in your employer's retirement plan? Obviously, we pointed out some deficiencies if we don't save, but it's a fact. Many people don't save in their employer's retirement plan. Social Security won't be enough. We have to overcome inflation eroding our purchasing dollar. Every day we see people that continue to work because they cannot afford to retire. And it's tough to save. We have rent to pay. We have car payments. We have mortgage payment. We have children expenses. We have groceries. We have health insurance. And the expenses are on. And it's very tough for someone to participate in their employer's retirement plan when we're faced with meeting our expenses really month to month. So what is in it for you? One of the first benefits of your employer's retirement plan is you get to save on a pre-tax basis. Most commonly, people will save somewhere between 20 to 30% in tax savings. That means that every $100 you save in your employer's retirement plan, you're only going to miss $80 out of your paycheck. That's the value of a pre-tax contribution. Some people can qualify for Saver's Tax Credit. In general, for those that make less than $36,000 per year, get unearned income tax credits that they can file on their tax return. There's tax-deferred compounded growth of your money. All your earnings accumulates tax-free. You get to save through convenient payroll deduction. And as I just said, it comes out of your check before taxes are calculated for federal and state income tax. Most of the time you have multiple investment choices. You also have the Olson Group Financial Advisor team. They come out, they're on campus, they'll meet individually, and also do a host of financial seminars for employees. All of these things are great advantages of your employer's retirement program. But best of all, your employer matching contributions make a huge difference in how you accumulate money over time. What's that mean to you? The answer is very simple. Free money. When your employer matches you dollar for dollar up to a certain percentage of your salary, the compounding is very compelling. We show an example of a 3.5% match in this chart, and we show at all different ages and several different incomes. And if we take a 25-year-old and we assume that a 4% growth rate each year, you can see the matched amounts at 3.5% of pay. The bottom line is when that 25-year-old gets to age 65, they will have contributed a little over $18,000, but what's their account worth? Over $96,000. That is well over 500% growth on your money. This chart has a number of different ages. I'm going to give an illustration for a 35-year-old. Again, a 3.5% match. And when they get to age 65, assuming 4% growth, they would have contributed around $21,000 of their own money. Their account value is over $86,000. That is a 400% return on our money. And let's take somebody that's age 65. And my example is an illustration for 5 years later, that this 65-year-old retires at age 70. The 65-year-old person is going to participate in the 3.5% match that the employer offers. When they get to age 70, they would have contributed a little over $4,000, and their account is worth over $10,000. That's a 250% return, even for somebody that's already age 65. So when should you start saving in your employer's retirement plan? The time is now. No matter what your age is, free money is true value. You also get the help from the Olson Group Financial Advisory team. We come out on site, we'll meet individually, one-on-one with employees as needed. We have a host of financial seminars that talk about all kinds of retirement topics. And we're available on our toll-free line with any questions that you may have. Thank you for joining me on this episode of the Olson Group Benefits TV. Please remember how powerful that free money and your employer's matching contributions are to you. In all likelihood, you will save more money in your employer's retirement plan than any other place during your entire working lifetime. If you have questions, we have answers. Feel free to contact our office at any time. I'm Tim Olson, and I look forward to seeing you on future episodes of the Olson Group Benefits TV.